Thanks for staying with us, everyone. Government has finally started servicing debts owed Eurobond investors. The government concluded the Eurobond debt restructuring last week, with the bondholders exchanging their old papers for new ones. Here's George Afis starting us off.
Joy Business understands that in all, about $520 million have been paid to these bondholders. $160 million was about that consent fee that government agreed to pay to the bondholders if they participate in the haircut, as well as the Eurobond debt restructuring deal. Now, when government in 2022 embarked on this debt service freeze, it actually put on hold the debt repayment to these investors. Now that that debt deal has been finalized, Ghana is supposed to pay all these monies due to the investors since December 2022. Hence this $360 million payment. We also understand that the first coupon payment for the restructured Eurobonds will be done next year on January 3, 2025, and the next one will be in July 2025. Based on what happened last week, some are arguing that government can now say that it has concluded the domestic and the foreign debt exchange program. Well, many will be looking forward to see how this news will impact on the economy and even the Ghana cedi.
Meanwhile, three of the major global rating agencies, Moody's, Fitch, and Standard & Poor's, have all upgraded Ghana's credit worthiness. This was influenced by completion of the debt restructuring deal with the Eurobond investors. Here's more.
The three rating agencies in their separate report argued that Ghana is now in a better position to meet its financial obligation to its creditors. That is, when it comes to paying investors that have bought Government of Ghana bonds, hence the review. Moody's, for instance, upgraded Ghana one level up from CAA3 to CAA2 when it comes to bonds issued. Moody's, however, thinks that risk associated with Ghana has reduced a little bit. Fitch also moved Ghana from CCC to CCC+. Though an upgrade, it is still in that risky category. However, Fitch believes that Ghana is also in a better position to settle its debts. But despite this positive development, some of the rating agencies are still worried about the political risk associated with the December elections and its impact on the economy. Fitch, for instance, was worried about the fact that a large chunk of Ghana's revenue will go into debt servicing. On the outlook, Moody's also maintained that based on these measures that government has taken, it is optimistic about things improving going forward, hence the positive outlook.
All right, let's bring in Professor William Swipa, who is Associate Professor of Finance at the Andrews University. Good afternoon to you. What does this upgrade from Fitch, Moody's, and Standard & Poor's mean for our economy?
Good afternoon to you, Daryl, and good afternoon to your viewers. So if we know, when Ghana declared that we will not be able to service our debt, we went into a default state. These ratings from Moody's, Fitch, and Standard & Poor's put Ghana in a very bad position, meaning that we were in a position of default, and we actually defaulted in our servicing of our Eurobond debts. As we finished the negotiation and started making the payment, this brought in some little bit of assurance to the market that Ghana now has the ability to service its debt. The ratings that have been given still comes with an indication of some financial distress conditions. Ghana, from the foreign currency Eurobond situation, is still seen as extremely highly risky. And then from the domestic Eurobond, those in our local currency is termed as substantial risks. So still, we are still in the junk position. But because we have started making some payments, it moved us from default to a point of bringing in some financial risks. The argument that these rating agents are making is that there's still some impending challenges in our cash flow system in Ghana, whether we're able to generate enough revenues apart from the $3 billion we have received from IMF to service our debts when they are due.
Yeah, Prof, anything to celebrate here? Like you point out, we're still in the junk status. How significant is this upgrade for our economy? I mean, we've heard from some economists who say we should be measured in our expectations on how this is going to impact our economy.
I mean, why should we celebrate? Because the CC ratings still mean that there is a high probability for Ghana to default.
Mm-hmm.
The only thing that has happened is that we stopped paying our debts and now we have started paying them. So there's nothing for us to celebrate about them. What we should be thinking about is how are we going to sustain the payments? Will we be able to generate the needed revenue from taxes to be able to service these payments as they become due? That should be the major concern. And once we're able to provide that kind of evidence, it will bring the confidence back into the economy. So the real job is how government is going to collect revenues to be able to service these debts when they are due.
Yeah, we were going to be talking about the debt restructuring a bit and how the government has started or resumed payments to Eurobond investors. But the Moody's, for instance, makes mention of some fiscal risks that the government has to contend with, shows that we are still vulnerable and we still have a long way to go, Prof.
I mean, you see, that is very, very true. We have election ahead of us. That is a political risk. When it comes to the financial risks, if you look at revenue collection, in line with the impending claim that we have to pay, you will notice that about 80% of what we are going to collect, if we are not getting any support from the IMF, would have gone into that. So that is also a major challenge. And that is why they said that kind of financial risk. So our financial risk ability is getting the needed funds to be able to pay. We know the $3 billion that we are receiving from IMF, though we've had about, from the Bank of Ghana, about 6 to 7 billion in terms of international reserves. These funds, we will not be able to use them to support trade if, as we are supposed to do. We need to cede about 5 billion to a servicing debt when they are due. So the financial risk is how the finance ministry will manage the resource allocations and to be able to make sure that we are in a position to pay our debts. And we hope that we will not default. In an event that we default, it is going to worsen our situation. So this is a major challenge and a major test for Ghana.
All right, two things. The government has resumed servicing, like I mentioned, Eurobond debts, whilst we expect that of the bilateral creditors to begin in 2026. We're reporting today that the finance minister has presented a proposal to the cabinet for best investment options in creating a sinking fund and to help reduce the fiscal burden when the time of repayment commences in 2026. Your thoughts?
Remember, I think when we spoke somewhere early this year, I made this point that we need to have this sinking fund established long ago, especially a sinking fund not in CD, but in dollar-denominated terms, so that this will really support us. The moment the sinking fund is established, it gives assurance to bondholders that Ghana is planning to make payment, and this is going to even help to find a way to impact on the ratings we are receiving, and that will even move us from the CC classification to a B- classification. So the sinking fund establishment is something that must be done now, and something that we have to even back it with law. We have to go to Parliament and get a law backing it, so that we are not going to, we plan to make the payment into that account any moment they are due. And then we make sure that it brings some stability into the economy. One advantage with the sinking fund is that it's going to also help to have an impact on our weakening exchange rate situation, because it brings some assurance into the market. The only challenge is that if we establish a sinking fund, it may impact government or Bank of Ghana's ability to provide dollars to traders. So that is a trade-off between establishing a sinking fund and also supporting international trade.
All right, we have to leave it here. Professor Williams Pippa, Associate Professor of Finance at the Andrews University, joining us with his thoughts on the stories as we continue to follow them. This is The Marketplace, your financial markets update coming up next. All right, we have got some good news. Government recorded a marginal oversubscription of the Treasury Bills after 3 weeks of failing to meet its target. It follows an increase in interest rates and reduction in the size of targeted amount. Joining me on Zoom is Patrick Edemagama, who is head of trading at Republic Securities, with a rundown. Good afternoon to you, Patrick. So how did the auction fare on Friday?
On the money markets last week, we noticed that the government raised a total of 4.6 billion, accepting and allotting some bids against a target of 4.56 billion. We noticed that 1 million for the 364-day was rejected because of the high yield that was being quoted during the auction. This represented a 1.08% oversubscription, and this also exceeded the target that is about 48.93 million. It exceeded the target by 48.9 million. So that is also a sign that the confidence is resuming into the market. The 91-day cleared at 25.62%, increasing by 16.16 basis points. The 182-day increased by 10.45 basis points to close at 26.90. And then we saw the 364-day closing at 28.58%, increasing by 6.41 basis points.
The Treasury Bills oversubscribed after 3 weeks of the government failing to do so. Explain to us what happened within the last 3 weeks, for which some people were panicking, and why there should not be any panic.
Well, we are seeing that, as we are approaching elections, people are trying to take some positions with regards to the bills also increasing. The targets also increasing. But the good thing is that we still have the IMF monitoring the country. So that panic should not be in the market at all. Luckily, the targets are also reducing. The one coming up this week, is actually about 4 billion target. And the one that will follow will be also lower. So we expect the government to oversubscribe in terms of the collection of these particular bills. So there shouldn't be any panic. We're also seeing secondary markets. We are seeing an increase in the secondary market trades. For last week, we saw a 32% increase, about 4.85 billion traded in the secondary market. Out of this, 9% was bonds. So about 9% was allocated to bonds that traded. So it should tell you that the confidence is increasing. And now that we are almost done with everything in terms of the debt restructuring, the investors should rather calm down and take advantage of the opportunities in the market.
Well, as you bring it up, we've got news of debt restructuring, government resuming payments to Eurobond investors. Also, we've got a ratings upgrade by 3 of the global rating agencies. How do you expect that to impact the markets?
Again, the positivity is what we are all looking for. The market players are all looking for that confidence in the market, that investors can be very assured that their coupons will be paid on time. And then the government can also see this as an opportunity to raise funds in the market. So once confidence is high, as we've seen in the past, then we expect things to be smooth. But we cannot attest to the fact that the confidence has been very low due to the exchange, the debt exchange and all that's happening. But gradually, we expect all these things to bring more confidence into the market.
Okay, let's turn to the stock market, because we expect the share price of Ecobank to go up as demand surges. What's happening there?
Well, the Ghana Composites, the GSE's Composite Index closed at 38.86% last week. The financial stock index closed at 15.87 last week. We saw two laggards, MTN and New Gold, dropping some pesos, and then we saw GCB being the main and the sole gainer for last week. Again, demand is mounting in GCB, Total, and Ecobank. So we expect these prices to go up in no time. On the other side, we've seen that there is supply in MTN and SIC. The supply is increasing in these stocks, so we expect them to lose some pesos in the coming weeks.
All right, good to see you, Patrick Edemagama, Head of Trading Republic Securities. Enjoy the rest of the day. You're watching The Marketplace. Taking a quick break. We'll be right back. Welcome back to The Marketplace. The Ghana Statistical Service is initiating a nationwide accommodation unit survey to evaluate the condition, number, and overall impact of accommodations on the GDP. President of the Ghana Hotels Association, Dr. Edward Akanyamike Jr., believes the survey will accurately reflect the hospitality sector. He shared his thoughts with Joy Business during the Ghana Statistical Services Accommodation Unit Survey Consultative Meeting in Accra.
The Ghana 2024 Accommodation Unit Survey, created by the Ghana Statistical Service, aims to gather data from commercial accommodation units catering to both domestic and international guests. Dr. Edward Akanyamike, President of the Ghana Hotels Association, expresses support for the initiative.
They are going to look at every aspect of our operations, revenue side, and then the expenses side as well as the various facilities that we operate with, and of course the taxes and levies that we always complain about. It's all captured there, okay? So it's giving a holistic picture of the hotel industry, and I think it is very necessary, and we are happy that it is being done, because this is something that was mooted some years ago, but it was not implemented. But now we can see that the Ghana Statistical Service is very ready and prepared to do that under the Tourism Satellite Account project.
Director of Research, Monitoring and Evaluation at the Ghana Tourism Authority, Dr. Spencer Doku, deemed the survey timely.
While the GTA collects data during inspection and other surveys to inform policy, the depth and scope of these data are often limited. At the international level, our representation of the accommodation sector contains gaps, casting doubts on the sector's seriousness. The need for reliable and credible data is long overdue, and the time for action is now.
Survey coordinator at the Ghana Statistical Service, Dr. Ebenezer Kojo Okran, elaborated on the scope of the survey.
We need the accommodation unit survey also to be able to compile our tourism sector account. So from November 1, 2024 up to October 2025, we are going to collect accommodation unit status data from 177 selected accommodation units throughout the whole country. We expect the hoteliers to help us in this direction by helping our field officers to collect this data to be able to compile the tourism sector account as well as to be able to compile our GDP.
The survey will encompass various commercial accommodation units such as hotels, guest houses, budget hotels, hostels, homestay accommodations, apartment and other facilities listed in the 2024 Integrated Business Establishment Survey in Ghana.
Now, the UK-Ghana Chamber of Commerce has raised concern about the decline in investments from the United Kingdom for the second and third quarters of 2024. Executive Director for the Chamber, Ajoba Chiama, attributed the decline to the current economic downturn, but expressed confidence in a turnaround soon for investors. She spoke to Joy Business at the Chamber's Teeing Up for Growth initiative.
This year's UK-Ghana Chamber of Commerce Teeing Up for Growth Golf Tournament was to celebrate Enterprise Life for 800 years of operations. Ajoba Chiama commended the company for their efforts in contributing to the growth of the insurance sector for economic growth.
Recently, it's been very difficult. We know what the economic climate is, so there hasn't been as much interest as previously. We live in hope, so we're hoping that things will get better. This second half of the year, we're seeing increased interest. We're getting inquiries for due diligence, for introductions to potential business partners. So we are hopeful that the tide is turning. Today, this morning, we're hosting a golf tournament for Enterprise Group. They're a partner member of the UK Ghana Chamber of Commerce.
Head of Business Development at Enterprise Insurance, Mark Addison, reiterated the company's efforts to ensure best practices in their operations.
Enterprise Insurance, which is part of the Enterprise Group PLC, is 100 years this year. And it's a major milestone, as you can see. We are happy about it, and we are saying that for 100 years, we are the oldest insurance company in Ghana. It started as an agency office of a UK insurance company called the Royal Exchange Assurance in 1924, and today is Enterprise Insurance. We have led the narrative of the insurance industry to change in terms of claims payment.
The UK Ghana Chamber of Commerce was established in 2016 to promote and grow trade between the UK and Ghana.
All right, that's the marketplace. The day's biggest stories on our website, myjournline.com/business. Government resumes Eurobond debt servicing after completion of action program with investors. Also, T-bills auction, government records marginal oversubscription, but interest rates rise. myjournline.com/business. My name is Darryl Kwao. Thanks for watching. We will be back same time tomorrow.